I'm not sure why I'm quoting one of Britney Spears' early #1 hits. Well, paraphrasing is more like it. Oops, they did it again. And they is the Federal Reserve. The country's been waiting to see rates drop this whole year, all to be disappointed again. And I guess we'll have to wait till September to see if we say oops or yay. While we wait, let's discuss the broader trends across the country, and specifically how those apply to us here in the Inland Empire. There's a lot to cover, including inventory shifts, the impact on pricing, and what all this means for buyers and sellers. Let's dive right into it. Across the US, we're seeing what's being described as a tale of two markets. The market dynamics differ based on where you live. On one hand, areas like the Northeast and the Midwest are still relatively tight in terms of market inventory, making them a buyer-driven market. On the other hand, the South and the West, which includes California, are experiencing inventory increases that are creating a more balanced or even buyer-favored market. Now let's bring that closer to the Inland Empire. This region has traditionally mirrored the overall trends of the West, where inventory levels have been increasing year over year. Realtor.com reports that regions like ours are seeing more frequent price cuts and longer times on the market. So you've noticed houses sitting unsold for a little longer than they did a couple years ago. That's consistent with these broader trends across the West. Nationwide, inventory levels remain about 13% below pandemic averages, which is a key driver of price trends. However, not all states are experiencing this equally. What does that mean for us locally? More inventory creates a downward pressure on prices, which we're starting to see in some areas of the Inland Empire. Homes that were priced aggressively last year are now facing price reductions. Buyers have more choices than they did during the pandemic-driven market frenzy. However, this doesn't mean prices are crashing, as demand still remains relatively strong in certain pockets of our area. We're also experiencing what economists call a buyer-seller imbalance. In regions like ours, there tend to be more sellers than buyers at the moment. This dynamic is why we're seeing longer times on the market and more negotiations happening between buyers and sellers on pricing. Well, what does this mean if you're the buyer or the seller? If you're buying, you're in an outstanding position to negotiate, potentially securing concessions like closing costs or price adjustments. That's why demand is up this year. For sellers, it's crucial to price your home competitively from the start. Homes that are priced in line with market conditions are still selling relatively quickly, particularly in neighborhoods with desirable schools or amenities. Back to interest rates we referenced at the start. Rates are holding steady into August. However, August has seen an improvement in the rates due to the anticipation of a Fed rate cut coming in, well, maybe September. The odds are we'll see one, but not much of one. The Inland Empire is closely following the trends of the broader West region, with increasing inventory creating opportunities for buyers and new challenges for sellers. As we continue into the second half of 2025, understanding how these dynamics affect our local market will be key to making informed decisions. If you're looking to buy, sell, or just want advice tailored to your personal situation, feel free to reach out. I'm always here to help. And remember, real estate's hyper-local. Even within the Inland Empire, trends can vary widely from city to city. So let's talk about what's happening specifically in your neighborhood. And thank you for tuning in, and don't forget to like, subscribe, and drop any questions in the comments below. And we'll see you around in the Inland Empire.